This week, we had an important update on the Australian labour market with the release of the June quarter wage price index and the June labour force survey. Both came in weaker than expected. So does this mean this is as good as it gets regarding wages growth, employment and unemployment? While we are close to a turning point, we think it's too early to get all gloomy about the labour market and wages. Why? First, we have the release of the June wage price index, which measures the change in hourly wage rates and is the RBA's preferred measure of wage inflation. It rose 0.8% in the quarter, on par with previous two quarters, but a bit less than market expectations for a 0.9% rise, and our own forecast for a 1% rise. This saw the annual pace slow from 3.7 to 3.6. There were stronger wages gains in WA, where wages were up 4.2% in the year, on the back of the mining-led recovery there, but elsewhere, wage outcomes have softened. Private sector wage gains have moderated with annual wage growth flattening out around 3.8% per year. The public sector wages have not picked up as expected, with annual wage growth lifting from 2.9 but still a modest 3.1. So does this mean we have seen the peak for wages? While we are close, we don't think so. The main reason being is the outsized gains seen in the minimum wage this year of around 5.9% and the 15% increase for aged care workers, which is in addition to the minimum wage increase. This increase will be paid from the 1st of July and so will appear in the September quarter data. In addition, there are a fair number of enterprise agreements and even individual arrangements which are linked to the minimum wage. Last September, the wage price index rose 1.1% on the back of a 4.7% increase in the minimum wage, suggesting this September with the larger increase, we'll get an even larger rise in the wage price index. But do remember, we're seeing an underlying moderation in wages. Our previous forecast for wages was to peak around 4.1% this year. Now it's likely to peak something closer to around 3.75%. This is where the labour force survey kicks in. In July, employment fell by close to 15,000, the first decline we've seen since April. In addition, unemployment rose to 3.7% from 3.5%, as the fall in participation was not enough to stop the solid lift in the labour force due to the ongoing strength in the working age population growth. Working age population growth is growing at 2.8% per year, the strongest we've ever seen in the data, on the back of the current surge in migration. So is this the turning point for the labour market? We don't think so. The ABS went to some length to point out that in July, the survey fell during the winter school holiday period. And since COVID, there's been significant shifts in the pattern of hiring and the starting of new jobs around holidays. They also noted that the only other decline in employment this year was back in April, again during a school holiday period. With vacancies rising and hours worked all robust, it's all pointing towards a strong labour market. And we think July was just a blip and we should see a significant correction in August, and the current momentum of employment can continue through to the end of the year. It's worth noting that after the school holiday-induced decline in April, employment surged more than 76,000 in May. Something similar is likely in this August. For the RBA, it's a bit of a Goldilocks situation. That is an economy that's not too hot, not too cold. Employment continues to grow, and yet wage inflation remains relatively well contained. However, for households, it's a bit more mixed. Ongoing strength in the labour market is significant positive as household confidence in job underpins spending decisions. But real wages, that is wages less inflation, continue to lag behind broader expectations. And that is a clear dampener on confidence and spending. And so we'll continue to see the ongoing tension with the robust immigration underpinning broader economic growth, but limited change in the economic situation for most Australian households.